Okay, good evening once again. Today we're going to use Excel to both Excel and R to create an efficient frontier. This is fundamental to finance students, okay, especially masters na tayo, no? Parang ano sa atin to, it's something that it's like rudimentary for us. It's an ABC for us. So it will not look good if we're master students and then we don't even know the concepts behind Harry Markovits. Siguro naman you have heard of Harry Markovits, no? And the modern portfolio theory. If not, class, you owe it to yourself to read through that. At least aware kayo, no, na meron palang tinatawag na uh, MPT, Modern Portfolio Theory. Ito yung dinevelop Harry Markovits actually won a Nobel Prize for this. Fundamental ano ng concept ng fundamental theory ng risk and return, okay? And tells us that two possible optimization objectives are risk minimization and profit maximization or return maximization. So ito yung uh, journal na sinulat ni Markovits in 1952 pa to, no? Although may mga variations na improvements dun sa model, still it remains as one of the bedrock of finance. So let's first try to see kasi sa Excel madali yung efficient frontier. Minsan sa R kasi ang disadvantage hindi pa ganun talaga kaano. Well, may yung F portfolio, no? It's a package that can handle this. Kaso nga black box siya, no? Ilalagay lang natin yung code tapos lalabas yung ano. Hindi natin masyado naiintindihan kung ano nangyayari. For me, Excel is a good way to really appreciate yung MPT, yung efficient frontier, yung portfolio optimization. Okay? So let's identify muna start date natin, start date, saka end date. Okay. Hindi pa tayo nag-Excel talaga, not even once. Kasi ang focus talaga natin is R. I have a problem with my ano. Kaya na po ito nagkakaproblema yung Excel ko eh. Ang tagal eh. Is it my mouse or siguro may problema yung mouse ko? Dali lang ha. Just ano siya, naglalag. And I don't know what's causing this. Dali lang. Ano nga muna to? Sige. Okay. So, tagal. Dahil lang guys ha. Wait lang. Pause ko muna yung recording para hindi sayang recording natin. No? Ang tagal niya hindi ko lang alam kung, wait lang ha. Pause share. And pause. Okay, as I said, what we're going to do tonight is briefly, of course, our main machine, our main software is still R. But I'd like us to appreciate what this Markovits portfolio optimization is all about and the efficient frontier. Aren't you discussing that in your portfolio management? In your portfolio management, did you get a chance to come up with the efficient frontier and do some optimization, maximizing returns, maximizing Sharpe ratio, minimizing variance? Meron ba?
Wala pa, sir.
Wala? Oh, sige. Okay lang. At least dito,
Concept lang, sir. Not
concept lang. Oh,
yeah.
dito, gawin natin ha. Mag-ano tayo. Okay lang ba, class? Mag-quant talaga tayo. Ha?
Yes, sir.
Okay, sige. All right. In Excel, you can download prices, no? So let's identify start date natin. Well, siguro gawin natin what do you want? Buong year? Sige, say buong year ng ng 2022 na lang, no? 1/1/2022 hanggang 12/31/2020. So let's take a look at the whole year of let's get prices. And then dagdagan natin para para mas malaki yung natin. So let's see 1/1/20 na lang 2016, okay? Mas malaki 'yon. 1/1/2016 hanggang 2022. All right? And then let's write here the ano yung mga stocks na gusto natin tingnan. Lagyan natin, we're going to write here the sticker symbols. So let's see, Microsoft. Right here, Microsoft. What else? Tesla. Okay. Do you want, class? Google. Right? So let's make it 5. Right, 5 na lang. We can of course make it 10 or even 20 if you want, but let's just limit it to 5 stocks. Ayan, good rows. Ayan, so ayan, sige, good. All right. Okay, what else? Anong stocks? Kayo, class, mag-identify. Anong stocks ang gusto nyong gamitin sa portfolio natin? Sige, Facebook. Ako din nagsasabi yan. Meta, Facebook. Okay, and then, ano pa? Sige, maglagay naman tayo. Lahat to tech stocks eh. McDonald's. Okay. All right. Sige, let's limit ourselves to 5 stocks, no? Of course, it can be 2, it can be 3, it can be 4, it can be 5. Let's just limit ourselves to 5 stocks. Okay. So, kung updated yung nyo, yung Excel nyo, you can now type is equal to stock. Yan. May function na stock history. And it returns an array of historical code for a symbol and date range you specify. So, pwede ka pala mag-download ng ng stock prices using Excel. You can. Okay. Dati, pwede na dati yan eh. Tapos it got lost for a while. And then recently, how many months ago or years na ba, I got surprised na binalik na naman ni Excel. So the interface with Yahoo was again established. So let's just give this a name. Do you know how to give names to cells in Excel? Guys, do you know how to give these names? Anybody? Kunyari, I'd like to give this a name. Ito, bibigyan ko ng pangalan to na start date. Ito naman end date ang ibibigay ko. Would you know how to do that? Anyone?
No, sir.
No?
Yung sa upper left,
dito.
yung B2, yeah, yung current
Yan,
B2.
this is called the name box, no? You can use this, but there's a shortcut, no? Kasi pag ita-type, kunyari, may 10 cells kayo na bibigyan ng pangalan. One way to do it is to type here. Example, ito. Kunyari, ito. The name of this cell is B2, but I'd like to change the name. Kunyari, gagawin ko siyang start date, no? Start_date. Okay, kasi ang name sa Excel, yung hindi pa pwedeng dapat isang name lang. So you can do that by typing kunyari start_date. Dapat hindi pa pwedeng two words, no? So dapat connected siya by an underscore. Hindi pa pwedeng dash, hindi pa pwedeng slash, hindi pa pwedeng at. May mga symbols hindi pa pwedeng. Okay, but the shortcut is highlight this. Okay, paki-highlight to class. And then highlight natin tapos dali ba dito yung Okay. Hinahanap ko yung para Next time, ano naman tayo? I-on natin yung camera natin para nagkakitaan tayo. Kasi matatapos yung term, hindi pa nagkakitaan. Baka we might bump into each other sa Lasal tapos we don't even recognize each other. Okay, so highlight both cells, and we would like to give a name for this January 1, 2016. We'd like to give it the name start date. And yung 12/31, we'd like to give it the name end date. No? So, okay. What did I press? May press akong shortcut key. No? The shortcut key that I press is Control-Shift-F3. Anybody using Mac here? May nagma-Mac ba dito? Kung meron ko, I think Command-Shift-F3 yata. But kindly check, please. What did you see, class?
Parang hindi gumagana.
Hindi gumagana?
Sa akin rin, sir, hindi gumagana.
Hindi, sige, hindi. Okay, stop share ako. Sige, paki-ano nga, can somebody, sino muna? Ikaw muna, Tim, kasi ikaw nagsabi. Kindly share your screen. Alright. Sige nga, highlight mo. Yeah, bali A1, yan. Tapos Control-Shift-F3 nga. Press Control, tapos Shift, tapos F3 sabay-sabay. Sa keyboard mo. Wala. Hindi, sa keyboard sa keyboard mo.
Yes, sir. Parang wala.
Control, yung Control, tapos Shift, tapos F3 sabay-sabay.
Wala, sir. Hindi gumagana, sir.
Walang
Okay.
ano? Walang?
Hindi lumalabas yun.
Hindi lumalabas. Yung F3 mo ba, naka-function ba yan? Nasa taas siya?
Yes, sir.
Baka kailangan Control Shift Function F3 kasi baka naka-function dapat yung F3. Could you try, please? Wala rin?
Kaya search ko na lang, sir.
Sige. Sino pang wala? Naka-Mac ka ba? Uy, naka-Mac ka pala eh. So hindi, ano yata, baka Command Shift.
Command Shift F3, sir, wala.
Wala. Okay, sorry
Sige,
okay, sige. Kung for those of you who don't have so dapat nasa ano tayo? Kasi kung sa Windows, share screen ako Kung sa Windows kasi, pag hinighlight ko to, Control Shift F3, lalabas to, no? So ang ano diyan, create names from selection. So shortcut siya. And then I'll unclick top row kasi yung pangalan nasa left column. Ito yung pangalan na gusto kong ibigay dito sa cells na to. And when I click OK, what happens is that if I press the name box, ayun, may mga pangalan, no? Yung end date, if I click it, it refers to this one. Yung start date, if I click this, it goes here. Okay, yung wala, pwede nyo lang i-type na lang muna. You go here and then type start_date. Or you can go here, nasa ano siya, nasa formulas. Okay, highlight nyo muna. Tapos go to formulas. Tapos ito yung define name. Define name. Okay? Hindi. Wait, create from selection pala, sorry. Highlight. Create from selection. Yan. Diyan lalabas yan. The shortcut of that is Control F3. Control Shift F3. Okay, may I know who among you were able to do the Control Shift F3? Feedback, please.
Nagawa ka, sir.
Nagawa, okay, good.
Sir,
Okay, good. All right. So, yung mga Mac users, paki-discover na lang please kung ano yung may keyboard shortcut yan sa Windows, Control Shift F3. I'm not sure sa Mac. Pero kung hindi highlight na lang, tapos go to formulas. Formulas, and then here, ito sa defined names, create from selection, then as I said, tatanggalin ko si top row kasi yung names nasa left column. Okay. So now, these cells now have names. Now, we give names to cells, especially if you're going to use that in formulas. You're going to copy that formula, hindi mo na i-fix kasi pag ginamit mo yung name na yan, so itong cell na to, hindi na B2 yan. The name of this cell is n_date. Yung mga names, you cannot use cell addresses. Kunwari, you cannot name this cell as J5 kasi may name na J5 eh. Okay? You can only give this a name na hindi na tapos may ibang rules na walang mga special characters, etc. Okay, so let's go here. Let's go here to the left of so may Microsoft tayo dito, di ba? Sa A5 kasi dito ilalagay ni Excel yung dates, no? So let's type stock history, and then anong stock? Ito, Microsoft, comma, start date natin ito, right? Comma, end date, this one. Okay, may mga iba pa dito, naka-bracket siya, ibig sabihin yan, ano, yung optional. Mamaya, kakailanganin natin yan. So, close natin, and then, enter. Okay, what do you have now? Did Excel give you the Microsoft prices? Closing nga lang binibigay niya. No? So, ito yung closing prices from yung in-specify natin January 1. Kaso walang trading day nung January 1. So, it gave us the first trading day of 2016. So, ibig sabihin, walang trading nung 1-1, nung 1-2, nung 1-3. Most probably, 1-1 holiday, 1-2 was a Saturday, 1-3 was a Sunday, kaya 1-4 yung 2016 yung yung simula. Check na natin. Ano ba yung function niya? Weekday of this, and then return type. Okay. Sige, 1. Tingnan ko lang kung anong date to. So, 1 is Monday siya. Tama. Tama yung sabi ko, Monday siya. Okay, feedback please. Were you able to download?
Sir,
Yes?
may error sa
May error. Sige, tingnan natin ha.
Dito, sir, wala siya na-generate.
Wala na-generate?
Nag-ano
Opo.
siya, hashtag value.
Nag-value.
Nagba-value?
Parehas
Sige.
kami.
Sige, tingnan natin ha. Stop muna tayo. Kasi baka what you have to do kung matagal nyo na na-register yan, baka kailangan nyo ulit what do you call it? Ang tawag doon? Yung papasok ka ulit sa Microsoft tapos i-key-in ulit yung address mo. May I see? Stop share
Ako,
ako.
sir, ginamit ko kasi yung Excel na sa online.
Oo.
Gumana naman siya, sir. Nag-download naman.
Sa online? May Excel online ba? Hindi ko alam.
Yung hindi, sorry, sir. Yung Excel na kinuha ko dun sa SharePoint sa work.
Okay. Baka
Gumana naman, sir. Nag-download. Baka
Okay.
kasi updated yun, sir.
Oo. Sige. Sino yung kanina? Sino yung nagsabing ano? Could you kindly share your screen? Tingnan natin. Yeah. Si Rap. Sige.
Ayan, sir.
Sige nga.
Ito.
Sige. Rap.
Yung mouse ko na.
Punta ka ulit sa sa A5. No?
Ay, teka, sir. Sorry. Ano ba yun ako, sir? Ito pala.
Yan. Oo. Yan.
Ayan, sir. Yun naman yung formula ko din.
Si F2 mo nga. F2 mo, please.
F2. Okay,
Oo.
F2.
Ayan. Yan yung formula, no? B4. Tama naman eh. Start date and date. You try pressing Control Enter nga. Control Shift Enter. Subukan mo.
Shift, enter.
Ayaw, no? So, naggaganyan kung na-experience ko na yan, ang gagawin ng ganyan, you have to log in ka ulit sa sa Microsoft. No?
Okay. Sige, sir. Lagyan
Subukan
ko
mo
feedback.
Do that now, tapos give us feedback, no? Sige, thank you. Who else? Who else? Kasi we need to have the stock prices. Otherwise, for the whole period, titingin lang kayo, no? Kailangan meron kayo. Kasi what we can do is, if you are not able to get it, ano ko siya, i-share ko sa inyo para may at least may data kayo.
Sir, ako din.
Kayan, sige nga.
Same as po.
Sige nga, you try, pareho din nagbabayad lang.
I-download ko na lang ulit
Oo,
yung...
try ulit.
Diba?
Oo.
Okay.
So sino pa? Si Tim. How about you, Tim? Were you able to get it?
Sa akin, sir, parang block yung date.
Pati nga, Tim.
Yes, sir.
Ito hindi ko alam sa Mac kung... Pero kung may formula ng stock history, ibig sabihin that should work. Black, kailangan mo yatang mag-ano ulit. Ganyan yung nangyari sa iba kong students, tapos nag-login ulit sila sa Microsoft. Tapos na ano. I suggest you log in ulit, no?
Yes, sir.
Key in ulit yung Lasal address mo, tapos ano. Sige, I'll wait for you guys. Otherwise, if it still doesn't work, then I'll go through the other stocks. Then isi-save ko lang yung file na to, tapos isi-share ko sa inyo para we will be working on the same prices. Otherwise, kung wala kayong data, you'll not be able to follow along. Sige, I'll give you a few minutes, maybe 2 minutes, 3 minutes, try, and then please give me a feedback. Pause recording ko. Remind nyo ako na i-continue recording, baka makalimutan ko. Saan na yung recording? Bakit wala? Okay, so let's now get the stock prices for Tesla, Google, Meta, and McDonald's. Now, for this one, you notice that for Microsoft, I placed the formula here. There, it's here in A5 because I had to include the date first, okay, and then the price will be on the next column. For Tesla, we don't need the date, so I'm going to put it under Tesla so that the prices will just be the one to be downloaded. Okay, so stock history. Okay, the stock is Tesla. Okay, it's above there, the ticker symbol, and then comma, start date. This is the start date. And that's the advantage of giving names to your cells because that is already fixed. You don't need to fix that. Sorry, it should be start date, comma, end date, comma. Now it says here interval. So we need daily. So either I type 0 or just ignore. Okay. By ignoring it, Excel will read that to be 0. So that's daily. Here, okay, no header. So ignore again. I want it no header, comma. And here, all right. What do I want to put here? The date, the close, the open, the high, low, the vol. Unfortunately, Excel did not include the adjusted price. Sayang, kung may adjusted sana yun ang pipili, that would have been the one that would have been chosen by us. But there's no adjusted price, so we will just have to choose with close. So I'll type 1 here. Okay, 1, and then just ignore the others. These are just optional. There. Okay, and I press enter, and then there. Okay. And then I can just copy the formula to the right. There. Okay, so there you go. Parang R lang, parang quant mode lang na download natin yung mga stock prices. And that's up to 12/30/2022. May I ask the class if you knew that in Excel you could download stock prices? Did you have any idea that you could do that in Excel?
No, no, sir.
No, sir.
No, sir.
Very good. So new discovery for us, no? And besides, class, this was already available before. And then natigil kasi natigil yung API with when I think it was Verizon. Yeah, it was Verizon, the company that acquired Yahoo, no? So nung acquire na ni Verizon yung Yahoo, nawala na yun eh, na yung API, yung interface with Microsoft dun sa Yahoo Finance. But I don't know when it was restored kasi nagulat ako maybe siguro last year o mga 1 year ago na eh. Nagulat ako na pwede ulit yung stock history. Okay, so I'll be requesting, yes?
Sir, possible din ba to sa mga local stocks, domestic stocks?
Ah,
Like BPO?
Hindi, unfortunately hindi kasi, 'di ba? Was it in your class na sinubukan natin yung BDO
Yes,
or
sir.
ano? Wala
Sa
eh.
ano? Sa
Wala.
okay, sir.
Kasi ewan ko.
Wala din dito sa Excel. Okay, sir.
Ang takaw kasi ng Philippine ng PSA. Siguro kung pinoprovide nila kay Yahoo Finance yun, 'di ba? Di ma-accessible din yun. Yun tayo eh. Medyo I think I told you a story where I was doing some research and they were asking me to pay, how much was that? I can't recall. 100 pesos yata per page of stock price. Mga historical yun ha. Siyempre wala namang puti sana kung it would have been understandable. Pero mura naman siguro yung 100, no? Kung stock price siya na forecast, no? That they did some modeling tapos they're giving you forecasted stock price for the next 1 month, for example. That would have cost something kasi may intellectual na dun eh, di ba? May intellectual dimension which they did. Pero historical, di ba? Hindi naman, do they own that information? Hindi naman. Kaya, ewan ko. Anyway, all right. So, Tim, is it okay for you to, actually, pwede pa natin, sige, dagdagan natin isa. So, wala pa dito, no? What if I put here, what do you want to put here? Lagyan lang natin pangalan dito. Netflix, sige. NFLX. Okay, so yan. Alright. So let me highlight this. And then i-format ko lang siya. Control 1. I'm going to, dito sa numbers. Tanggalin ko lang yung dollar. Okay. Number lang, 2 decimal places. Okay. Alright. Tim, I hope you don't mind sharing an
Base as values ko lang, sir.
Sorry?
Base as values, yung
Pwede na rin. Pace as values mo lang kasi hindi mag-work sa kanila yun kung naka-formula. Thank you, Tim. And then when your classmates have it, those who are not able to use the stock history, kindly chat or unmute yourself lang so that I know if I can continue already. Let me put this here. Copy natin to, no?
sent na, sir.
Thank you, Tim. Yan. Salamat, Tim. Okay, those of you who don't have the data, kindly download it so that you can follow along. When you have the file already and opened it, okay, ano lang okay, inform me so that we can continue.
Sir?
Okay,
Sir, ang format po is number po.
sorry.
Number po. May
Yeah,
dollar kasi yung...
tinanggal ko yung dollar. Number na lang,
Ah.
tapos 2 decimal places.
Okay.
Para kasi yung panay dollar lahat yun. We're not anyway interested kung sa currency. Okay, so again, paki-chat ka kung ready na. Again, what are we attempting to do here? We're using Excel, and then after this, we're going to use R to do the same process, okay? But maybe a different set of stocks. Of course, R has more power as far as the functionality is concerned. No? Si Excel lang naman I'd like us to use that kasi here you can see what's happening. Kay R kasi parang black box siya, di ba? Bigla na lalabas yung result. Where we really don't know how the process, how it came about. Here, we're going to really do the wet our fingers and wet our hands and do the process. Okay, good. All right. Okay, sino pa ba wala? Okay na, no? Okay na lahat? Si Rose, si Kayen, si Jonah, si Tim, okay na? Sino pa yung isa dito? Ayan, okay na. Si Kayan dyan pala. All right, good. Okay, so let's get the log returns. Di ba, alam nyo naman, there's a difference between simple returns or discrete returns. Okay, quick review lang to ng financial. No? Simple or discrete, which is just undiscrete returns. If we're going to get it, it's equal to, for example, for Microsoft, it's the price at time t divided by price at time t minus 1 time the previous time minus 1. So this is the return for your or rate of change for your simple returns lang. Yung continuous, sabi natin, it's the log. Sa R, log. Sa Excel, ln. No? Kasi ang log sa R, it's the natural logarithm. So it's ln of this divided by this. Yan. So you can see the difference. Magkaiba sila, no? Okay, let's use log returns kasi sa finance, ito yung oftentimes used. Kasi may advantage yung paggamit ng log returns. Okay, so it will be equal to, okay, now I'm going to put this here, by the way, sorry. I'm going to put this here. Kasi wala namang returns tong 1-4, no? Kasi wala siyang previous date. So ln of this amount divided by this amount. Okay, enter. And then let me copy this to the right. And then, okay, click down. And then maybe, let's just, bawasan lang natin decimal place. Okay. All right. So maybe I'd like to just give it a little shade, just to be able to easily distinguish it with the prices. Lagyan ko lang ng konting shade. Yan. Okay. Any questions? No questions? All right. Okay, let me copy this. Okay, Control C, Control V. We will be computing later yung excess returns. So this is your log returns. We'll call it excess over mean returns. Yung excess ng returns niya, excess over the mean. So which means we have to compute for the mean first. Okay? So let's compute for the mean. Okay, so let's do that here. Let me copy this, Control C and Control V. Okay, so let's call this expected returns. Oops. Expected returns, and it should be E of R. Okay. Okay. Pangit ng baka parang minus. No? Yun lang. And expected returns. No? All right. What else do we need to compute? Let's also compute for the variance. Variance, tapos standard deviation. Okay, lagyan na rin natin ng ano ng symbol to just para lang oops, nawala. And then insert ko yung insert symbol. Insert symbol nasa, if you look for the subset, Greek and Coptic siya. No? I'm not sure kung ginagamit nyo to. Kasi gamit ko to eh. And the symbol is sigma, di ba? Ang variance. This is sigma. Insert, close. And then I'm going to put 2 here. And then control 1. And then superscript. Yeah. Okay. Okay. Formatting lang naman yan, class. Hindi naman naman. Okay, then of course, the standard deviation. Copy na lang natin ito. Remove this. Okay, and then we actually need the risk-free rate. Oops, doon napunta. Risk-free rate to, no? Risk-free rate. And yung Sharpe ratio natin. Ito yung ginagamit madalas sa ano eh. Equal to shift plus 1. Which is your expected expected return minus your risk-free rate divided by your sigma. Okay. Right? Sharpe ratio natin, which is your expected return minus the risk-free rate, and then divided by the, so this is the risk-adjusted returns, itong Sharpe ratio natin. Okay. All right. So let's compute for this first kasi we need this in order to compute for the excess mean returns. No? Kailangan natin kasi itong excess over mean returns to compute for your variance covariance. Okay, so for Microsoft, the expected returns will simply be the average. It's just the average of your returns. So shift down arrow, control backspace, okay. There. So that's the average returns for our 6 stocks. Gawin natin percent para ano. Para mas kita natin yung figures. Yan. 0.0838. Okay. Okay. Then let's give this a name, class. Itong array na to. Gagamitin natin to yung for the whole returns. Let's give it the name stock. One lang. Stock returns. Enter. Okay. So itong buong cells na to, may pangalan siya, stock returns. Okay. And then you have the variance, which is just equal to bar dot s. Kasi sample lang naman yan. Bar dot s of your returns. Okay. All right. So that's our variance. Okay, for the standard deviation, you can use stdev.s, or you can just get the square root of your variance. Let's just get the square root of the variance. Square root of the variance. Okay. And then the risk-free rate. Okay, so risk-free rate usually ano yan? It's based on the treasury bill rates, ano? Meron ba taga BSP dito? Anyone working with BSP?
Sir, ako po.
Would you know the average na ano? Risk-free rate?
Ay. Sir, hindi.
Di ko alam. Sige, ano lang natin na estimate natin na. So this is estimate natin at 2%, no? Minsan naglaro siya to 2, 3, 4 thereabouts. So 2% na lang, 2%, and then we have to divide this by 252. Bakit? Kasi itong 2% na yan, annual rate yan. And we're dealing with daily rates, no? So that's how to convert your risk-free annual rate into daily rate, divide by 252. Okay, so let me gawin natin percent lang din lahat to. Copy na lang natin format na to. Para hindi masyado malaking decimal. Yan. Okay? So that's our risk-free rate, around 0.008%. Okay, these are daily rates, no? Daily metrics. And the Sharpe ratio will now be equal to your expected returns minus your risk-free rate, okay, divided by your standard deviation. Expected return minus your risk-free rate, okay, divided by your standard deviation. Okay, we already gave this a name, stock returns. Ito kay i-highlight ko nga to para alam natin ito yung may mga pangalan. No? Ito then, we need to give this a name. So let's call this STDEV, standard deviation. Ito may pangalan din to. Standard deviation. All right. Are you able to follow, class?
Sir, paano yung nakuha yung risk-free rate?
Risk-free rate is okay. We're assuming that the risk-free rate is around 2%. Okay, naglalaro naman ng 2, 3, 4 yung risk-free rate. And then we divide it by 252. Why are we dividing by 252? Because there are approximately 252 trading days per year. Okay, so it discounts the weekends. Kasi wala namang Wala naman trading pag Saturday, Sunday. Okay. Any other questions, class?
Yes, sir.
Okay, all right. Kung wala na, let's proceed. We can now compute for this. Excess over mean returns. So this is equal to yung returns ni Microsoft minus yung average returns. And then I'm going to i-fix natin yung row. Okay, para hindi umalis sa row na to. Okay? If I press enter, oops, ang laki ng copy natin yung format nito. Tatanggalin natin yung bigyan natin ibang kulay para madaling makita yung excess. Okay, copy here to the right and copy down. Okay, pause muna ako in case you have questions, clarifications. So this is your excess over returns and we'll give it a name, no? Bigyan natin ng pangalan. Let's call it excess returns. I'm going to highlight everything here. Control Shift down arrow. Control Shift down arrow. Ayaw gumana ng mouse ko. Yan. Para ma-highlight yung buo. And then I'm going to give it a name. XRET, which is excess returns. There. So itong buong cell na to, class, may pangalan yan. So if I go here, ito yung XRET natin, i-highlight niya kung ano yung whatever the XRET is. And then here, start, yan, stock returns, ito siya. Standard deviation, STDev, yan siya. Okay, pause ako, class. Are you able to follow?
Yes, sir.
Okay, good. All right. Did we discuss last time yung yung returns ng portfolio at saka risk ng portfolio? Did we discuss it, class? No. How do you compute for the returns of a portfolio? Kasi what we have done is to compute for the individual returns. No? These are individual returns. This one. Log returns ni Microsoft. These are your average returns. Diba? So how do we compute for the returns of a portfolio? If you have a portfolio of assets, how do you compute for the returns? Okay, so the returns, draw lang tayo. So the return of a portfolio, let me call it R sub B. Okay, wait. Okay. The return of a portfolio is equal to okay, that's the return of a portfolio. So what does this mean? We just sum up all the weights multiplied by the returns of each portfolio. So if you have a 3-asset portfolio, it will be weight 1 times return of 1 plus weight 2, return of 2, plus weight 3, return of 3. So that means we have to know the returns of the assets, and then we have to know the weights. Okay, if they're equally weighted, if there are 3 stocks and equally weighted, that should be 1/3, no? 1/3, 1/3, 1/3 lang yun. Because the sum of the weights should be equal to 100%. So that's how you compute for your portfolio returns. Madali lang to, no? This is very simple. No brainer to. Basic algebra, basic arithmetic lang. Hindi nga algebra. It's just arithmetic. Now, the problem or the challenge is for the portfolio standard deviation or the portfolio risk. Okay, because if you know the standard deviation, okay, of course, just get the square root of that, you get your portfolio risk. I mean, if you know the variance, you'll be able to compute for the standard deviation. So ito medyo mas mahirap, no? Kasi anyone who can tell me the formula for this one? What is the formula for a portfolio risk variance? Anyone? Okay, sige, i-discuss ko ha. The metric or the measurement of portfolio risk is equal to, so we have this strange formula, okay, but this is very important because this is the bedrock of modern portfolio theory. So this is WI, WJ, and then you have this covariance IJ. I ranging from 1 up to n, and J ranging from 1 up to n. Okay, so this is what we call this is the variance of your portfolio. And of course, if you get the square root of that, you get the portfolio standard deviation, which is usually what's used as a metric as a measurement for the riskiness of a portfolio. Okay, so it's important for us to know how to use this formula. So let's just make use of a 3-asset portfolio. No? If we have a 3-asset portfolio like this one, so the return of that portfolio is very easy. We have to know the weights, W1, W2, W3, and you have to know the returns, the average returns of each portfolio. If you know that, then the returns of that portfolio is very straightforward. Just perform that formula. What's quite challenging is the risk. Okay, so let's compute for the risk of this portfolio. 3-asset portfolio, 1, 2, asset 1, asset 2, and asset 3. Okay, so how do we compute for this? Since there are only 2 parameters here, then we will just have to pair each of them. For example, 1, let's first pair 1 with 1, and then 1 with 2, and then 1 with 3. And then 2 with 1, 2 with 2, 2 with 3, and then 3 with 1, 3 with 2, 3 with 3. So that's how we perform this double summation here. Okay, so you first fix this. For example, 1 with 1, 1 with 2, 1 with 3. Okay, you let J range from 1 up to n. And then you go next to 2. And then you once again let J range from 1, 2, 3. So that's the pair, right? And then we move here from 1 to 2, then from 3, and then let J range from 1, 2, 3. Okay, so you can see the combinations now here. 1, 2, 3, 1, 2, 3, 1, 2, 3. All right, so let's perform this. So our variance will be, for the first one, we pair 1 with 1. It will become W1 times W1. But what's W1 times W1? It's W1 squared, right? W1 times W1, and then this one. This is the covariance actually. So what's the covariance of 1 with 1? The covariance of 1 with 1 is actually the variance of 1. And we write it this way. Okay? Variance of 1. Okay, pag covariance, you have two subscript there. Pag variance, isa lang, or standard deviation, isa lang. If it's covariance, you have two. Okay, so that's the first term, no? Uh, that's for one for one with one. Okay. Next, we have one with two. So that will be, so since we're summing plus, so you have W1, one with two. That's W1, W2. And then this is one is now covariance one with two. So that's your next element. Okay, 1 and 2. And then the next one is 1 and 3. So what will happen now to 1 and 3? So plus W1, W3, covariance 1 with 3. Okay, so that takes care of the first I is equal to 1. Now let's go to I is equal to 2. So it will now be W2, W1, sigma 2, 1. But W2, W1, by commutativity, is just the same as W1, W2. And covariance 2, 1 is just the same as covariance 1, 2. Okay, if you recall, the formula for covariance between asset X and asset Y is equal to, it's the sum of X minus X bar times Y minus Y bar over N, or N minus 1, depending if it's a sample. All right, so it doesn't matter if it's covariance XY or covariance YX. They're the same, okay? Because we can change the order of this one, and by commutativity, we'll still have the same answer. All right, so W2, W1, covariance 2, 1 is the same as this. It's also W1, W2, covariance 1, 2. So if we add that here, this will become 2 now, 2. Okay? All right. So I hope I'm clear, class. So I'm just hurrying with this because I know that you can easily understand this. And then next, this one, next is, so we're done with 2, 1. Now we go to 2, 2. So this becomes W2, W2. That means W2 squared. Okay. And then sigma 2, 2. Sigma 2, 2 is just the variance of 2. Okay, variance. I squared dito and then 2. All right. So that's 2, 2. Now how about 2, 3? 2, 3 will now be what? So that would be W2, W3. And we don't have it here. So we're going to put it here plus W2, W3, covariance of 2, 3. Okay. So that's your third pair for I is equal to 2. Okay. And then last, for your third pair for I is equal to 3. So that's 3, 1, 3, 2, 3, 3. So that will be Y31, Y1, covariance 3, 1, which is just the same as this one. Okay. W3, W1, covariance 3, 1 is the same as W1, W3, covariance 1, 3. So since we're adding, we put a 2 here. So that takes care of 3, 1. For 3, 2, it's W3, W2, which is this one. Okay, so this becomes 2 again, 2 also. And then lastly, W3, W3, that's W3 squared. Variance of 3. All right, so this is now the variance of a 3-asset portfolio. So ang daming terms, no? Okay, so this is quite a challenge if we're going to do it mathematically or manually. Okay, of course, you add everything and then get the square root that will give us our portfolio variance. Okay, since we're finance people, class, we will not do this manually. It will take us ages. But there is in matrix algebra that can easily be shown that, okay, what we're going to do is we're going to construct the variance covariance matrix. This is very important. Variance covariance matrix, and we're going to need that in order to create portfolios. Okay? So, ang objective natin is we're going to create portfolio in order to come up with the optimal portfolio. So, we need this variance covariance. So, we need your assets. Let's just take a look at a 3-asset portfolio. 1, 2, 3, and then 1, 2, 3. Okay, my digital pen is not that good. Okay. All right. So what's this one? Variance. Why is this called variance covariance? Because the covariance of 1 with 1 is actually its variance, diba? Variance ni 1 yan. The covariance of 1 with 2 is covariance 1, 2. Covariance of 2, 1 is also covariance. It's covariance 2, 1 or covariance 1, 2. They're the same. Okay, ito naman 2, 2 is the variance of 2. 3, 3, that's the variance of 3. Okay? And then this one is 3, 1, it's the same as 1, 3. So this is the covariance of 1 with 3, which is the same as the covariance of 3 with 1. Pareho lang yan. They're the same. Ito, covariance of 2, 3 is the same as covariance 3, 2, based on the formula. Okay, so we need this matrix. Now imagine computing for this, no? Computing for the variance covariance for 1. And how about 1 with 2? How do we compute for this? So, diba, ang formula is x minus x bar, summation of x minus x bar times y minus y bar over n. So, this is really a complicated formula. Okay, and it will take time. However, it can be shown that this matrix here can be computed using a very simple formula in matrix algebra, and that's your sigma, which is your variance covariance. Okay, this is actually your sigma squared. Your variance covariance is equal to, okay, the formula for that is your x ret, your excess rate, okay, and then transpose this multiplied by your x returns, okay, and then divided by n minus 1. Okay, so if we can perform this function, then we will be able to compute for our variance covariance, this one. Okay, and if we're able to compute for our variance covariance, then we can easily compute for our portfolios. Okay, so let's do now the computation. Okay. So what we need to do now is to define your variance covariance. Okay. So variance covariance, we need to control C, control B, and then here transpose natin. There. So these are our 6 assets. Home, this one. And then we're going to compute now for the variance covariance. Kasi class, if we're going to do this one at a time, diba? Ang tagal niyan. It will take us time. Okay? So ito, plus, we're just going to copy. Okay, lagay ko dito yung formula. You might as well write it so that you sabi natin yung insert natin to. Insert symbol. yung capital sigma. Sigma. And you can look for it in Greek optic. Okay. Actually, this is your sigma squared. That's your variance kasi sigma squared is equal to, okay, x ret transpose times x ret and then divided by n minus 1. Okay, let me explain this. Okay, let me just fix this so that this one should be control 1, this one should be superscript, nakataas siya. Okay, so this one class, this one is the formula to compute for this whole thing here. Okay, so that's the power of linear algebra. That's the power of matrix algebra. Just color that. Okay. All right. So let me do that. Let me illustrate that to you. Now we have to have this, the x ret. You have that. Have we named that? Yes, x ret. And then we have the n here. Okay. So let's also. Oops. I think I forgot to include here the n. Ilan ba? N. How many is our sample? So we count our returns. So 1761 all in all. Okay, I just counted how many returns do we have. Okay, let me pause for a while, class. Ask for your feedback so far. If you're able to follow along, if you have any questions, please feel free to ask questions. Yeah, let me give you time to also work on your spreadsheet.
Sir, ano ulit yung sa N natin? Ano yung measure natin doon?
Yung count lang to, ha? Okay. It's
Ng...
the count of your returns. Yan, kinount lang natin kung ilang returns.
No, isang stock lang.
Yes, just one stock.
Okay, got it.
Okay, good. Thank you for the question. Any other questions? Clear types of variance, standard deviation. Okay.
Sir, question.
Yes, go ahead.
Sir, anong name nung, nag-change ba tayo ng name doon sa expected return?
Expected return.
Opo, doon sa fee.
So,
Yan.
stock
Ay,
returns ang
hindi.
tawag
Stock
doon.
returns.
Stock
Okay, thank you.
Yung X-ret, ito yun excess returns yun. So iba siya. Iba siya sa expected returns. Okay, any other questions? Okay, thank you class for your questions. I appreciate that. Okay, so let's now imagine class kung iisa-isihin natin to, 6 stocks lang yan. What if we had a portfolio of 20 stocks? That would be a nightmare, no? Abutin tayo ng araw-araw nun. So in order to generate this, we will use matrix multiplication in Excel. Okay, yan ang kagandahan din ng Excel, ano? Yung matrix multiplication niya, but we can do that. So let me if you have not done that, let me illustrate to you how. So you have to highlight the array because this sigma squared is your variance covariance. This is the symbol for your variance, sigma squared. Okay, and it's equal to it will be related to your x ret, which is this one, xret, and then you have here transpose times xret over n minus 1. So xret is a matrix. Okay? So we're multiplying matrices. So let's do this. It will be equal to multiply matrices in Excel, we use the mmult function, mmult. There. So what matrices are we going to multiply? We're going to multiply the transpose. This T here is the transpose. And transpose means you are changing, you're making the rows into columns. So for example, in this case, we have the size of our matrix is of our excess returns, it's 1761 by 6. There are 1761, sorry. Yeah, 1761 by 1761 rows by 6 columns. So that's 1761 by 6. Okay, when you transpose that matrix, magiging 6 by 1761 siya. Okay, because the order will be changed. The direction, it will become just like parang na-invert lang siya, no? Imagine parang may ano ka, you have a column, and then yung column na yon, you flick it to the right. So parang ano na siya, nakahiga na siya. So that's what happens with the transpose. So ang gusto natin ay matrix multiply natin si transpose ni xret. Okay, let me just first increase the so that you can easily see. So once again, highlight this. It should be highlighted class, no? Is equal to mmult, and then our first array is the transpose of xret. So what I'll do is get the transpose of x. Since we gave it a name, then it will be very easy. So that's one advantage of names. You don't have to highlight everything there. You don't have to highlight the whole excess returns. Especially if your data is tall, then that could take time. And also very prone to error because you might miss a particular row. Yeah. So xret and then comma array2. So you're multiplying the transpose of xret with xret itself. There. Close. All right. So that will be the formula. So the transpose of xret divide matrix multiplication and then divided by, you have already n, right? Meron tayong, binigyan na ba natin ng pangalan? Hindi pa yata, no? Okay, sige, ulitin ko na lang ha. Let me give this a name. Ito. Ayan. Diba? Ang shortcut ko, Control-Shift-F3, or you can just do it here. I'll give this a name N. Capital N na lang. N. Alright? So may pangalan na to, no? Okay. So repeat, highlight is equal to mmult, and then highlight is equal to mmult. Okay. Transpose ni xret. Close that. Then, saan ko mmult? Yung transpose ni xret at saka si comma si xret din. Because that's the formula, xret. And then I close this, and then divided by parenthesis n. Okay, may n na tayo, di ba? Minus 1. Right. Okay, so that's the formula class. And then you don't press enter. Ang ipe-press nyo, Control-Shift-Enter. Sa Mac yata, Command-Shift-Enter. So Control-Shift-Enter or Command-Shift-Enter, I think. All right, you have that. And then let me just decrease lang the decimal place, masyado malaki. Percent ko na lang. All right. Okay, so that's your variance covariance. What does this mean? This is the variance of Microsoft This is the variance of Tesla, the variance of Google, the variance of Meta, the variance of McDo, etc. Okay? And a good way to check this is what's the variance of Microsoft? Diba? Ito, no? 315. 315. Yan, 315 to 315. Right? So we are able to validate that indeed this is the variance of Microsoft. How about this one? 13688, 136, naka-round off lang. Okay? 13688. All right? So we can validate that 0315. Ayan, variance yan. So yung mga variance, we were able to show that. Yeah, correct. 6183. Ayan. All right? McDonald's is 187. Okay? So that's one way to validate our variance. Then yun, variance siya. Kaya nga, this is called variance covariance. Because the diagonals are, they're covariance then, they're also covariances, but the covariance of an asset with itself is its variance. Okay? All right. Any questions so far? Any questions?
Mali yung value na nakuha ko.
Okay, sige. Mali, iba?
Yes, sir. Iba yung number. Negative number siya.
Negative number. Okay, hindi pa pwede maging negative ang ano. Sige, stop share ako. Okay, let's see. Variance cannot be negative also. Ang covariance pwede, no? Pero ang variance hindi.
Kasi,
Kasi,
sir.
alright, sige, let's check. Check ko muna yung, ano, yung sa name box, please.
Sige, sir. Saang part?
Sige, i-click mo yan. Sige, click mo. Oops.
The whole thing
Hindi, yung
ba?
drop down lang, drop down.
Drop
Hindi yan,
down.
hindi yan.
Alright. Okay.
Check mo yung XRET. Saan siya? Click mo nga yan. Okay. Hanggang dulo ba yan? Ano yung isa doon? Ay,
Ayun.
wait. Ayan, sige, sige. Check mo kung napunta hanggang sa baba, sa dulong-dulo.
Yes, sir. Dulo-dulo
Okay,
siya.
good.
Apo.
Okay, sige, good. Tama. Check muna natin yung iba, no? Sige. Okay, balik na tayo dun sa ano mo, sa yung ano din. Check natin yung XRET. Sige, let's go now to the formula. Sige, let's see. Highlight mo nga yan. Okay. Sige nga, bakit siya negative? No? Alright. Sige, so ulit, is equal to, ulitin natin. M-mult, no? Open parenthesis,
Yes, sir.
transpose, and then type mo lang XRET. Lalabas na yan. Ayan. Correct. Okay. Click mo siya.
Yan.
Or ano, or
Close.
tab. Close mo.
Tama.
XRET ulit. XRETR. Sige.
Okay.
Sige. Tab mo yan. Okay. Close. Hindi. Close
And
mo.
then,
Open parenthesis yan. Close mo siya.
close. Okay.
Close. Then divided by open
N minus
parenthesis. Parenthesis muna.
Okay.
N minus 1. Close. And then control shift enter.
Ayun. Okay na, sir.
Ayan. Palagay ko yung hindi mo na nalagyan ng parenthesis yung N.
Yeah. Opo. Yun na. Yun sa parenthesis.
Yan.
Okay.
Good.
Got it. Thank you po, sir.
Good. Okay. Thank you. All right. Thank you for asking. Okay. Share screen ulit ako. Okay. So we can see here, class, the very important variance covariance. So sa finance, ano yan eh? That's our fundamental ABC natin yan. We have to understand, we have to know what the variance covariance matrix is. Number one, in relation to returns. So you can easily compute this. At least pag nag-variance covariance size R, alam natin kung how it was generated, no? and what it means, yung variance covariance. Okay, actually, sige, while we're at it, i-ano na rin natin, no? Kasi pwede natin ma-compute dito yung variance covariance, it has its part, no? It will be used sa pag-compute ng risk ng sa risk ng portfolio. Pero in terms of interpretation, maganda rin natin malaman yung correlation. Okay, sige. Okay, let me see if I can remember. Ang correlation is actually related to our variance covariance. Sige, isulat ko yung formula dito. I think I can remember. Insert. Okay. Si rho, no? Rho. That's our correlation. Rho. Insert ko. Rho is equal to, okay, rho is equal to our variance covariance, no? So related kasi si correlation at si covariance. Sobrahan. So that should be our variance covariance, and then divided by yung ano natin, yung standard deviation. Standard deviation na naka-transpose, and then standard deviation. All right. So let me write the formula ng para naintindihan natin. Okay, naka-superscript to, squared, and then this one, naka-superscript din. All right. And then ito, ayan natin ito. Okay. So this is the formula for correlation. No? Minatrix formula ko lang. So it's equal to your variance covariance divided by the standard deviation of your assets, standard deviation transpose, and then standard deviation. Okay, so let's copy this again. Copy na lang natin to. Control C, Control V. Okay, mali. Dapat dito. Control V. All right. By the way, when you have an array, you cannot. Can you try removing one item here? Try removing one item there. Can you delete one item sa array nyo? Answer, class. What I did was, you cannot. No? You cannot delete a portion of an array. So if you want to delete this, you have to highlight everything, your whole array, and then dito you delete clear all para yung pati yung yung formats there. Okay? All right. So also as a practice also, let's now highlight this, and then let's compute for the correlation. Kasi actually, the correlation can be computed as, kunyari, correlation in Microsoft at saka ni Tesla. It will be equal to the variance covariance of Microsoft and Tesla divided by, check natin is equal to the variance covariance in Microsoft and Tesla divided by standard deviation in Microsoft. Okay, where's the standard deviation of Microsoft? Standard deviation of Microsoft is this one times standard deviation of Tesla. Okay, so it's the standard deviation of Microsoft divided by divided by the product of their standard deviations. All right. So if I enter this, so there. Ito yung ano nila, no? This is their, hindi ko gagawin percent. Okay, this is the correlation, 0.44. Ang correlation in Microsoft at saka Tesla is around 0.44. So this is quite moderately strong. No? They are moderately correlated. And kasi sa class in portfolio analysis, the general rule is that it's not good to have stocks in your portfolio that are highly correlated. It increases the risk. Kasi in cases of if there's a downtrend in the economy or in the performance of that stock in the market, so dalawa silang parehong bababa kasi highly correlated sila eh. Okay, that's why it's not from a theoretical perspective, it's not good to have stocks in your portfolio that are correlated or highly correlated. So let's see, tingnan natin kung sino yung mga correlated dito sa ano natin sa portfolio. Okay, so let's now compute for this using the formula sigma or the variance covariance divided by the standard deviations of each. Okay, so let's do this. So this is equal to, all right, bigyan pala natin ng pangalan to, no? Hindi pa natin, we haven't given this a name. So this one, highlight this, and then let's call it var covar. Yan. Variance covariance. Enter. Okay, so may pangalan na tong ano, no, tong matrix na to. So once again, we highlight everything, and then this is equal to, okay, paano siya? Your var covar, asan yung var covar natin? Var covar divided by, all right, quantity. All right, so this is now matrix multiplication. Matrix multiplication to nasa denominator. So it's equal to standard deviation. Asan yung standard deviation natin? S, transpose muna, no? So sabi, transpose daw. Transpose. Oops, mali ako. M mult. Now, take note, I'm putting it in parentheses ano, sa ilalim. Transpose ng STDev natin, di ba? Yan, STDev. We gave it a name, di ba? Yung standard deviation matrix natin. Okay? So we close the transpose and then comma. So it's transpose ng standard deviation multiplied by the standard deviation, STDev. There. Naka-matrix multiply siya. Iko-close ko yung transpose. Transpose. Ito, naka-close yung transpose. Iko-close ko yung matrix multiplication. There you go. Alright? So, pause muna ako. I-formula ko, Control-Shift-Enter. Okay, that one. Hindi natin ang okay, lagyan ko lang ng color. And then let me show you again the formula. Hindi ko na nalagay. Formula text. Formula nito. Okay, so that's a formula. Okay, and then kindly chat please if if you got the correlation. Any question ba? Okay. Thank you, Tim. How about the rest, class? Okay, good. Right, sige, let's give a few more seconds to the others. Ay, kanina pa pala yun, no? Okay. Sige, salamat. Yan. Hindi ko kasi nalalagyan ng ano ng... Alright. Okay, so how do we know that this is correct? How do we know that the correlation matrix is correct? Is there something there that you can use as a basis to say that our correlation matrix is correct? Anyone?
Yung presence of one na
Yes.
diagonal.
What does that mean?
Well, it's because it's referring to the same stock.
Okay.
So
if it's yes.
It's the exact stock. So, syempre, it has, pag parehong-pareho, yung correlation nila, it should be 1.
Yes, tama. Thank you. Thank you. You're correct. Tama. So, ang correlation ni Microsoft with Microsoft is 1. Siyempre. Di ba? The correlation of Tesla with Tesla is 1. Right? Okay. Di ba kanina nag-compute tayo ng formula ng correlation ni Microsoft and Tesla, 0.443. No, 0.443. No? Okay. So, let's take a look at what other stocks here are highly correlated. Ito si Facebook at saka si Google, no? Highly correlated. Pati si Microsoft and Google also are very highly correlated. Okay, so yung mga gantong klaseng portfolio class, in a sense, they have a disadvantage. Okay, to really diversify, it would be good to be coming from different industries. Kasi if your diversification is just the same from the same industry, there's a disadvantage to that. Okay, all right. So let's now. Okay, so we can now ano tayo ng portfolio natin. Okay, so let's have our portfolios now. Let's create our portfolios. Okay, we're now going to the portfolio, to the meat of this. Kaso nga lang, guys, I hope you don't mind, din na natin matatouch si R. Tapusin lang natin tong Excel, no? Tapos, ang suggestion ko, if it's okay with you, kasi I think baka matatapos natin to in 30 to 40, baka 40 minutes ito, no? Pero tapusin na natin. I don't want to discuss this again next meeting. Gusto ko tapusin na natin to. So let's start first with equally weighted, no? Equally weighted portfolio. Pag equally weighted, remember, if you're creating a portfolio, you have to have the weights of each of the assets. So equally weighted, no? So let's put here our weights. Okay, WEIGHTS. Lagyan natin to dito sa side. Right align natin para all right. So I'm going to code this para madali natin makita. Let me just make this as light blue. Okay, this is our weights. Why do we need the weights? Remember, to compute for your returns, we need this weights times the returns, diba? Diba? Weight times the returns. In order to compute for the variance, you also need the weights. And so whether you're computing for the return or you're computing for the variance, you're computing for the standard deviation, for the risk, you need the weights of the portfolio. Okay, because we're not dealing with only one asset. We're dealing with two or more assets. Okay, so let's go back. So we have to have this, all right? And then since there are pag equally weighted, so this will be equal to 1/6. Ba 1/6 siya. Yan. Bakit 1/6? We have six stocks sa ano natin, sa portfolio natin. And let's check. Dapat yung sum nito. Okay. Hindi ko lalagyan ng kulay para mas kita ko siya. Okay. Oops. Okay. Kahit 2 decimal places lang. Kahit 1 lang. All right. The weight should total 1. Okay? Because it's just like a distribution of the investments in your assets. Let's just decrease this. Okay. All right. So, okay, we can now compute for the expected return, ba? E sub R. Nag-aano siya, no? You can just copy this. Hindi na. Nadi-default siya sa ano eh. Ulit. There. The expected return. All right. So what will be our expected return? And then we will also compute for, let's copy this na lang, for our risk. Okay, by the way, lalagyan natin to ng hindi ER P, no? To signify that this is your portfolio. I-subscript ko lang to. So this is your expected return of the portfolio. Bigyan ko lang din ng ano lang. And then we need also the sigma, insert symbol. We need the variance. Let's just measure the standard deviation. Control 1, subscript. Okay. All right. Okay. So this is our standard deviation, our risk, and then our Sharpe ratio. Our Sharpe. Copy na natin nasa taas. No. Ayaw mo, ha? Insert na lang ito. Okay. Okay, our Sharpe ratio is that one. And then we subtract the risk-free rate. Okay. So it's the expected return minus the risk-free rate divided by your standard deviation. That's your Sharpe ratio. Sharpe one. The Sharpe ratio. Okay. So very easily, we can now compute for the expected return of the portfolio. Siyempre, class, the return of the portfolio will be just one. Kasi portfolio na yung pinag-uusapan natin. So ang return niya will be equal to what, class? We can use the sum product, no? Sum product. Kasi i-multiply natin yung sum product. We're going to multiply our weights. Kasi W1, W2, W3, diba? W1 times the rate of 1, okay? So that's your weights and your stock returns. All right? So what will happen here? Yung mga weights will be multiplied to your returns. Ito, yung stock returns natin. Sum product means i-prepare niya, kukunin niya yung product. So W1 times R1 and then W2 times R2. Notice that they have the same size, di ba? And then isa-sum niya. So that's a function sum product. All right? Enter. All right, so this is the return of your portfolio. Percent natin. Okay. Let's compare the return of our portfolio to our individual assets. Kasi sa individual assets natin, tingnan natin ang maximum nito. Ang best performer natin in terms of returns is 0.12, no? So that's Tesla. Tesla is equate ko lang to dito para makopy natin. Let's just take a look at our portfolio. Tesla is the best performer dito sa individual assets natin. When we establish a portfolio, equally weighted, tig 1/6 sila, we're getting this return 0.06, no? 0.06%. It's lower than Microsoft, but it's higher than Google, higher than Meta, higher than McDonald's, higher than Netflix. So it's in between, actually. So there are assets that are that perform better individually than the portfolio in terms of return. Okay? Sabi nga natin, si Tesla is the highest performer and Halos kalahati lang yung portfolio. Okay, but that's the trade-off class. And now we will compare now the risk. Let's take a look at the risk. All right. So how do we compute for the risk? Di ba ito yung formula natin? So, ito yung variance covariance. No? Pero how do we now compute for the risk? Okay. So the risk can be computed by, okay, would you know kung ano yung formula ng risk? Okay. So the formula of the risk is, okay, lagyan natin yung formula, weight, and then T, and then the sigma, and then 2, and then weight. All right. Let me just fix this so that we can see easily. Ay, mali. Okay. So this is the formula for the risk of the portfolio. Well, actually, may square root. No? Yan natin dito ng ano. All right. So this is the risk of the portfolio. Weight transpose times our variance covariance times the weight matrix, and then everything square root. Okay? So let's compute for that kasi, di ba, if we're going to compute for this, 8 assets to, di ba? So ilang terms yun? Lahat ng variance nila. So 8 na kagad yun, di ba? And then yung mga pairwise nila, W1, W2, W1, W3 hanggang W1, W6. Okay, so that's a lot of terms, class. So with this formula, okay, with this formula, so it's equal to, okay, lakayan ko ulit yung formula dito. So this is equal to, okay, M mult ulit, no? M mult. M mult nino. Okay, let me start with this, no? M mult ni transpose at saka ni var covar. So we first start with the transpose of transpose ni weights, no? Ito. Transpose ni weights multiplied by the var covar. Var covar. There. All right? So M multiply natin siya. Tapos ano mangyayari? Another M multiply, di ba? So mag-M multiply ulit tayo, M mult of the first two of the weight transpose times the variance covariance multiplied by the weight matrix. Yan. Okay? Sige, i-enter ko lang ha. Control Shift Enter kasi this is an array formula. Control Shift Enter. Oops. Saan ako nagkamali? Wait na. M mult ng transpose ng weight matrix. Okay? And then the var covar. So, sinarado ko na to. Kulang ba ako sa ano? 1, 2, 3. 1, 2, 3. Tama naman. Transpose, sarado na. M-mult, sinarado na. Yung M-mult, sinarado na rin. Okay, saan ako nagkamali dito? Control Shift Enter. Bakit error? Wait ha, dali class ha. Transpose. What's the size of this? 1, 2, 3, 4, 5, 6. This is a 6 by 6. This is a 1 by 6 matrix. 1 row, 6 columns. Pag transpose natin siya, magiging 6 by 1. Ayun, alam ko na mali ko. 6 by 1, ito, and then i-multiply natin sa the variance covariance matrix is 6 by 6. All right. Okay, now I know. All right. Ganito class siya. In matrix multiplication, I don't know if you have discussed this in your previous subjects, in your algebra, but let me just refresh so that we will be careful. Kasi meron tayong yung matrices, there's a rule for multiplying matrices. Kung multiplicable siya o hindi. And the rule is that when you're multiplying a matrix, hanggaan lang ako. Magdodraw lang ako para mas bilis. So suppose you have kasi may mali tayo sa formula natin, no? You have our W transpose matrix. Our W matrix is 1 by 6. 1 row by 6 columns. Pag transpose natin yan, magiging 6 by 1 yan. 6 by 1. Tapos, ang ano natin, variance covariance, ang variance covariance matrix natin is 6 by 6. Okay. When are two matrices multiplicable? If the row column of the first matrix is the same as the row of the second matrix. Take note, this is 1, this is 6. Hindi siya pwede. Hindi multiplicable yung ano natin, yung matrix natin. So nagkamali ako ng formula. Dapat yung T ko dito sa dulo. Dapat W transpose dito sa dulo. So let's check. So sabi ko ang formula pala, W sigma W. So what's the size of this? W is 1 by 6. Okay? Sigma squared, yung variance covariance natin is 6 by 6. Okay? So multiplicable? Yes. Kasi pareho tong 6, pareho tong 6. Ang size ng matrix, ang resultant size is 1 by 6. Ito yung mangyayari, ito yung magiging size ng matrix pag minultiply natin to. And then what's the size of this? This now becomes your W transpose. Your W transpose is what? Anong size niya? Yung W is 1 by 6, therefore the transpose is 6 by 1. 6 by 1 siya. Now, what's the size of this resultant matrix na to? So, itong matrix na to, yung W times sigma, this is 1 by 6, ba? 1 by 6. Itong W transpose 6 by 1. So, are they multiplicable? Yes. Kasi yung column ng first matrix is the same as the row of the second matrix. What's the size of the resultant matrix? 1 by 1. Okay, that's why we're only highlighting one cell. Kasi, ang result ng matrix multiplication na to is a 1 by 1 matrix. Alright? Sige, let me delete ko lang ha. Kasi makagulo tong. Okay, I hope that's clear, class. Somehow, I hope you have met this, yung mga rules na yan sa matrix, sa algebra nyo, or kung anong math man yung ano nyo. Okay, yun lang kailangan natin, kaya I checked kasi nag-e-error, so sabi ko baka mali yung size ko. Okay, so let me, dapat, ang transpose class, dapat ando dito. Control X, Control V. Okay, so the transpose will be on the second matrix. Depende kasi din sa ano, sa ayos ng ng matrix ng ano natin ng mga matrix. Kasi kung itong equally weighted yung position na to nakabaliktad, no? So which means 6 by 1, pwede siya. Kasi magiging 6 by 1 sorry. 6 rows 6 by 1 tapos transpose dapat para magiging 1 by 6 para multiplicable siya dito. Okay, so let's now do this. So this is now equal to, okay, so yung transpose class, tatanggalin ko to. Remove this. Remove this. So it's now M mult ng weights natin and the variance covariance, okay? So we close the M mult here. And then another M mult ng whatever the result here is and the transpose na. Okay, ito na yung transpose. Transpose ng W natin sa pangalawa na. No? Sa pangalawa natin ilalagay yung transpose. Therefore, Control Shift Enter. Okay, we now have our, copy ko lang yung format nito. Okay, we now have the risk of the portfolio. So we can now compute for the Sharpe ratio, which is equal to, binigyan ba natin ng pangalan tong RF? Bigyan natin to para ano, this one. I'll call this RF so that we don't keep on enter. So we'll just use the name.
Sir, patingin ulit ang formula.
Okay. Okay. I'll put it here, no? Para kahit na formula text. So this is, I'll just put the formula here. This is your expected return minus your RF divided by your sigma. Number na lang. Okay. Any questions, class? Questions? Were you able to get the answers? Okay, compare natin yung risk natin, 0.0295. Copy ko lang to, Control C. Dito sa taas. Tapos values dito sa standard deviation. Okay. Percent natin. Okay, so this is the risk of our portfolio, no? Take a look at the risk of the of your assets. Standard deviation nila. 1.7%, ito 3.6%, 1.7, 2.8. Okay. Let me check. Tama ba? Did you get 0.02, class?
Yes, sir.
Okay. 0.02, tama. Okay, what do you notice about square root? Tama. Okay. Ay, wait. Sorry. May nakalimutan tayo, class. My bad, no? Okay. Okay, kaya pala. Kaya sabi ko mukhang hindi So we have to put here square root kasi variance pa lang yan, no? So we have to put here square root of everything. Or you can raise it to the 1/2. There. Okay, yun ang sabi ko, parang may kulang pa ako. Kasi masyadong malayo yung ano natin yung risk. Okay, square root, ba? Kasi what you get here is just the variance. So to get the standard deviation, you have to get the square root. And once again, Control Shift Enter. Okay. There. Mukhang mas tama to, mas reasonable. 1.716. Control C ulit natin. 1.716. All right. So sa portfolio natin na equally weighted, you can see that it's less risky than Tesla, less risky than Google, less risky than Meta, less risky than Microsoft. No? But there are some assets where it's more risky. Mas risky si portfolio natin kaysa kay McDonald's. Okay, so but that's what really happens. Yung equally weighted portfolio natin, it will be the risk of which will be less than many of the assets, pero it will also be more than the risk of some single assets. No? Okay, but in our case, it's less risky than many of the assets. Kay McDonald lang yung yung mas mababa. Okay? All right. So, going back now here. Okay. Let's now create a portfolio with the minimum risk. Okay. Copy na lang natin to. Let's copy this. Tanggalin ko na iba dito. Right? I'm going to copy everything here and dito. Control C. And then Control B. Okay, di na dapat yung portfolio. Okay, let's now create a portfolio that, let's call this number 2. This is the minimum, let's call it minimum variance. Okay? Kaitan ng portfolio na minimum variance, ito yung pinakamaliit na risk na portfolio. Let me delete this. All right. The formula will be the same. Okay? It will be, nung kinopya natin, take note, sumabay din formula. So the return will be the weights na to, times the stock returns. Okay? The risk will be equal to yung weights, and then yung var covar, and then the weights, and then the Sharpe ratio will still be the same. It will be the return minus the risk-free rate divided by the standard deviation. Okay. So we will now ask Excel. Tatanggalin natin to. No? Let's remove this. So we will now ask Excel to, of course, magkakaroon siya ng parang error kasi walang values tong natin weights. So we will ask Excel to generate a portfolio. Siya mag-determine ng weights so that the risk, this one, is minimized. Ito yung pinaka-minimum na risk. Okay? So let's do that. All right. So how do you do that? You go to data and then check kung may solver kay class. Check if you have solver. So ginagamit mo sa optimization yung solver na yan. Ito yung ginagamit din ni R. Nagsa-solver optimization models din sila. So lahat ng softwares, whether it's Stata or R or Python, when they're doing portfolio optimization, solver yung ginagamit, just like here in Excel. Okay, kindly check if you have the solver function under data. So do you have it?
None,
Class?
sir.
None? O sige. Kung none, I'll show you how to do that. No? So please go to File, File, and then sa ilalim, options. File, then options. Okay, are you with me? Yung walang solver.
Yes, sir.
Okay, nakahabol na kayo dito ha. File options, then click add-ins dito. Dito sa tab dito, no? Add-ins. Okay, once you click add-ins, okay, sa baba, you'll see here, manage Excel add-ins. Dito yung go. No? Click go. Right, then you will see this. Yung mga add-ins. Paki-click si solver add-in. Yan. Most likely, hindi pa nakaklik yan dun sa inyo. Okay, kindly click that.
Okay na, sir.
Alright, so okay. Pag hindi ko na i-okay kasi meron na ako. Okay. And then, pag bumalik kayo sa data, meron ng solver. Okay, then click solver. Alright, ito na. Ito na ginagamit natin class sa portfolio optimization where we ask Excel to compute for the portfolio, the weights of the portfolio. Okay, so tatlong main parts dito, no? Objective, maximize, minimize, changing cells, and then subject to the constraints. Okay, objective related dito sa max or minion, changing cells, and then subject to the constraints. All right, so we will ask Excel to solve for the weights. And our objective is, sa set objective natin si sigma, si risk. And we are going to minimize it. There. Okay? All right, then, ano yung changing cells natin? Our changing cells will be your decision variables, ito. Kung ano yung pinapana, yung mga weights. So we highlight that. Highlight the weights. And then subject to what constraint? Ito sa ilalim. Here. Ito na yung changing cells natin. Ano? Yung kulay blue na yan. Subject to constraints, add natin. Okay? Constraints natin, dapat itong sum na to, ito, should be equal to 1. Yan. Dapat equal to 1 siya. Dapat 100%. Okay? Alright. Okay. Alright. So you have this, di ba? Okay. Before we solve this, pakisabi sa akin kung nakuha nyo, ha?
Sir, pwede pa ulit ka dyan.
Sige. Okay. Let me repeat na reset all ko, ha? Okay. Alright. Merong basically tatlong parts dito. No? Ito, objective. Yung objective, you can either maximize or minimize or obtain a particular value of something. Kunyari may tinatarget kang isang value. So, yung problem natin ngayon, gusto natin yung risk, ito. Kasi gusto natin minimum variance eh. So, the objective should be the risk should be minimized. Minimum risk dapat. Yung changing cells natin, yung pinapasolve natin. Di ba yung returns at saka yung risk, nakalink sa weights yan. So, ang gagawin ni Excel, isosolve niya kung anong mga weights dito ang magbibigay sa atin ng pinakamaliit na risk. However, may constraint tayo. Dapat, so dito sa constraint natin, mag-add tayo. Dapat, yung total natin, kasi itong formula na to, it's the sum of your weights. No? So make sure you have this class. No? Make sure you have this. The sum of the weights should be equal to 1. We have to put that. Okay, because otherwise hindi magiging tama yung solution natin kasi this is an investment. So whatever money there is, ipo-prorate natin sa mga assets natin. So the total of the proration should be 100%. Okay. All right? Okay, okay natin. Right. Any questions? So ito si B46, minimize, changing cells natin, yung decision variables natin, constraint natin, yung sum dapat ng mga weight should be equal to 1. And then take a look at this. No? Dito naka-default siya, no? Naka-default siya. So make unconstrained variables non-negative. So this means that whatever your decision variable is, so they should not be negative. So, yun. Okay, so what does that mean? Ang implication sa atin, walang short sale. Okay, ibig sabihin positive dapat yung mga weights natin. Kasi pwede rin pwede rin mag-short sales. Ibig sabihin ng short sales, magkaka-negative tayo na weight dun sa isang asset. Okay, ibig sabihin, hihiram tayo nun. We're going to borrow that asset, ibebenta natin para makabili tayo ng ibang asset. Okay, tapos later on, at the end of the period, ibebenta natin yung asset na binili natin to buy that asset na hiniram natin para i-buy. Okay, so short sales, I'm sure you have discussed this in your subjects. No? Short sales is used whenever there is a belief or projection that the sale prices the price of that stock will go down. Kasi iuutangin mo, hihiramin mo eh. Tapos ibebenta mo siya, di ba? You're going to sell it at that price, no? So whatever proceeds you get there, you're going to buy it for the assets of your other assets in your portfolio. Okay, tapos later on, you're going to sell that asset, no? Yung pinagbilhan nyo, yung binili nyo, tapos yung proceeds, you will buy back that share, yung asset na yun. Kasi bumaba na yung price niya. So again, ang objective ng short sales, ang may projection na bababa yung share price nun. Okay, anyway, so yun ang short sales. But let's not put any short sales yet. No? So lagyan natin ng check to para lahat ng variables natin positive, walang negative. Solve na natin, okay? And okay, solver found the solution. All constraints and optimality conditions are satisfied. Okay? All right, take a look at this. Ayan. Ito na yung mga weights ng portfolio natin. No? So, sandali. Dapat kinopya ko ito. Let me copy this. Control C. Ilagay natin dito. Para alam natin. Alright. So si Microsoft, 5.4% ng portfolio natin. Si Tesla, 0. Si Google, 20.3%. Si McDonald's, 69.7%. Si Netflix, 4.6%. Now, this is interesting, and this was expected. You know why? Kasi si McDonald's ang pinaka-konting risk. Siya yung pinakamaliit na risk. So, linode dito kay McDonald's yung portfolio natin. So, it will give us a portfolio risk of 1.273 and a portfolio return of 0.049. Comparing nga natin dito, 1.2, no? Okay? You notice that walang risk dito na mas mababa pa kaysa dun sa portfolio risk natin. Diba 1.273? Because that's the objective of portfolio. The diversification process will mitigate against risk. So your portfolio will now perform in such a way that it will outperform any of the individual assets in terms of risk, but not necessarily in terms of returns. Kasi 0.04 yata tayo. So yung portfolio natin na ganun yung weight, okay? In fact, notice na si Tesla, siya yung pinaka-risky na asset, 3.7 yung standard deviation niya as compared to the others. And then, siya yung pinakamataas na risk. And that's to be expected also because of the principle of risk and return. Pinakamataas yung return siya, mataas din yung risk niya. No? That's why, yung iba ang ginagamit yung Sharpe ratio din, makikita natin. Kasi yung Sharpe ratio, i-divide yung expected returns with the standard deviation to standardize para comparative yung if you're going to choose among the assets. No? All right, questions? Clear ba yon yung portion na to?
Yes, sir.
Okay. In fact, you can modify this, no? Okay, tingnan mo, si Tesla 0, si Meta 0. Okay, balikan natin yung solver. We can impose solver natin to. We can impose that pwede natin idagdag, add, that dapat yung mga weights natin dapat greater than or equal to, kunyari, lagyan natin ng floor na walang bababa sa 5%. So dapat lahat ng assets meron. Okay? So we can impose this, that your weights should be greater than 5%. Ibig sabihin, hindi tayo magsi-zero out ng mga assets. All of them should have all of them should have some ano to? Contribution to the portfolio. Okay? All right. Okay ko ulit. Okay? And then solve. You will see that the solution changes. Solver found the solution. Okay? Now, since nag-impose tayo, nabago na, no? Meron na tayong mga weights para sa lahat, yung iba 5%. Pero yung ano natin, yung sigma natin, 1.3. No? Now, if we compare this with the individual, 1.3, okay? Well, halos barely pareho lang siya ng McDonald's. Okay? And it's also possible na may isang asset dito na mas mababa pa yung risk niya. Kasi, nag-impose tayo ng constraint eh. Sinabi natin na dapat ang minimum 5%. Had we made it 10%, baka mas lalaki pa ito ng konti. Okay? So we can do that, no, sa portfolio optimization. So I introduced that kasi next week natin, pag nag-art tayo, next meeting, we will have to know that, yung mga imposition na ganyan. No? Okay, so let's do this. Copy ulit natin to. Control C. Control V. So this is now let's now create a maximum. Yung ano naman, portfolio na magbibigay sa atin ng maximum returns. Maximum returns, and this is usually based on yung Sharpe ratio natin, yung risk adjusted. Okay? We don't base it here sa expected return. No? Hindi natin binibase dito. Binibase natin dito sa Sharpe ratio. Kasi this is called your risk adjusted return kasi you're dividing it by the standard deviation. All right. So punta ulit tayo sa solver. Okay, ganun din, babaguhin natin ngayon yung objective natin will now be ang objective natin ito na, no? Ito. Yung Sharpe ratio natin. Maximum returns na tayo, no? And then it has to be maximized. Tapos yung changing cells natin, babaguhin din natin. Our changing cells should now be this one. Ito na yung changing cells natin. No? Kasi andito na tayo, class. Ha? We're now looking at this model. So we're now changing the parameters. And then, tanggalin muna natin itong ano. Let's delete this. So ang constraint natin will be the weights. The sum of the weights should be equal to 1. You have to change this kasi yung kanina, nasa taas yung ano eh. Okay, yung kanina itong AB44, tanggalin natin to. Kasi si AB44, yung previous model yan. Okay, so we have this. B55 is this one. To maximize your Sharpe ratio. Changing cells natin ito. Right, this one. Okay, if I click this. Ito yun, no? Okay. The weights should be also equal to 1. Solve. All right, solver found the solution. Okay. All right. So we have this, no? Okay. 66% kay Microsoft, 13% kay Tesla, 20% kay McDonald's. And that's understandable. Kasi class, kung titingnan natin yung returns nila, no? Si Microsoft ang return 8%, si Tesla 12%. But if you compute for their respective Sharpe ratios, so this is equal to, okay, sorry. Sin Sharpe ratio na lang. Okay. Sorry dapat tinuloy ko to dito. Okay. And if you take a look at the Sharpe ratio, si Microsoft ang pinakamataas ng Sharpe ratio. Yung expected return, si si Tesla. Pero when we divide it by the standard deviation, yung Sharp niya bumaba kasi mataas masyado yung standard deviation niya. So comparable na 'tong mga 'to. Okay, on a per unit risk basis, Microsoft tops them all. Tapos si McDonald's. Tapos saka na lang si Tesla. That's why when you look at the loading class, syempre natural, if you're going to maximize the returns, uunahin niya yung pinakamataas. Okay, kaya 66% si ano. Okay? Yung Sharp ratio pala. So the Sharp ratio here is how much? 0.05, no? 0.05%. Maka-percent ba yun sa taas? 0.045. So sa taas, 0.042 to, no? Okay, so yung maximum ano natin, yung portfolio natin na may pinakamataas sa Sharp ratio is higher, yung returns niya higher than any of the Sharp ratio returns. Ito 0.45, kay Microsoft yung pinakamataas nun, 0.42 lang, di ba? Yan, 0.042 or 0.43. Okay, so we were able to show here. Okay. So we can modify this also. Pwede natin gawing ano. Pwede kayong I will leave that to you as an exercise. Gawa na naman kayo dito ng panibago. Tapos may minimum wage dapat. O kaya you can include another. Okay, let's guys, is it okay to mga 10 to 15 minutes na lang. Tapusin na lang natin to. Okay lang ba? Do I have your permission? But if you need to go, okay lang ha. So allow me just to continue the discussion para tapos na to. If you need to go, I know it's already magna 9:30 na, no? So just allow me to continue. You may leave the session. Tatapusin ko lang yung discussion na to. Yun ipopost ko para hindi na natin babalikan to next meeting. Do I have your permission, class?
Yes, sir.
Okay,
Yes,
thank
sir.
you. All right.
Yes,
So,
sir.
i-copy ko lang to, Control C, and then dito ulit, Control V. Okay, you can have maximum returns, but with a minimum constraint, minimum risk, minimum with risk less than minimum with risk less than least risky asset. Okay, what do I mean by that? Okay, so dito, gusto natin na yung risk natin 1.614 kasi, no? Kung i-compare, wait, hindi, kinopya ko to. Tama, 1.614 dito. No? If we take a look at this, compare natin sa individual assets natin, yung pinakamaliit na risk is 1.37. 1.37. Yung risk natin, 1 point ano eh, 1 point, lan yun? 1 point, okay? 1.6, di ba? 1 point, saan yan? 1.6. Okay. So, paano may trade-off, no? Yes, we got the highest Sharp ratio, but yung risk natin, this risk is higher than that of Microsoft, McDonald's. So, maybe let's say, gawin natin yung risk natin, hindi tataas kay McDonald's. Yung 1 point, sabihin natin 368 na lang, no? So, let's let the risk be less than 1.368. Ilalagay natin dito sa constraint yun. Okay, I'm going to put that in the constraint here. Alright, so dito na tayo. Let me now create another model for this one. Okay, so data solver. I'm going to change this. Our objective now is this is still the Sharp ratio. The value is still a maximum. Changing cells natin, papalitan na natin yung panibagong mga weights natin. Okay. Maan na yata yung aking mouse. Nag-give up na. Delete ko to. Ito. This will be our and then yung natin, constraint natin. I-change ko to. Okay. Wait. Change. Delete ko na lang yan. Then, there's a problem with this one. Ano yan? Saan na ba ako?
So I think this is set objective.
Ay, oo
Dapat
na,
ba?
ano? Oo na move, no? So, dapat yung sharp lang siya. Yan. Maximize, changing cells. Ito, no? B62, tama. Changing cells, B59, tama. And then this one, we're going to change this. Change natin. It should be, ito dapat. Ba't yan? Ito lang dapat. This one, AB59 should be equal to 1 and, no? And add natin, our risk should be less than or equal to, ano yung 1.3, ano yung sa ano, class sa McDonald's, 1.368, okay, 1.368%.
Yes.
Okay? So gagawin natin yung portfolio natin, dapat yung risk niya hindi tataas dun sa pinakamababang risk dun sa ano, sa individual assets. Of course, maapektuhan yung Sharpe ratio natin. Okay, it will affect our Sharpe. It will affect our weights definitely. So tingnan natin. Okay? All right? So solve natin to. Solve. And then there, solver found the solution. Okay, ito na yung weights natin, no? Okay, tatlo lang linode niya, no? Sino to? Si Microsoft, etc. The rest are 0. And then take a look at the Sharpe ratio, 0.0428. Pero yung risk natin, 1.368 na lang. Mas mababa to dun sa McDonald's. Yung ano natin, yung return natin, Sharpe ratio, ano nangyari? 1.0428. Halos kapareho na lang siya ng Microsoft. Pero mataas pa rin siya. No? Nangyari dito, mas mataas pa rin siya kahit sa ano. So you can see here that the effect of a portfolio. You can create a portfolio which outperforms your individual assets. And you can also create a portfolio which is less risky than any of the less risky asset. No? Of course, magbabago siya kung mag-impose pa rin tayo dito ng may mga weights dapat yung iba natin. Or if you're willing just to take on these 3 assets. Okay din naman yun. Okay. So, just this last one, ito yung pag-create ng ano, no? Control C, Control V. If you need to go, class, go ahead, no problem. I'll just create ito yung last. Pero itong last, it will take me mga ano kasi, mga 5 to 10 minutes. Ito na kasi efficient frontier. Control C, Control V. All right. So now, tanggalin ko na to dito, lagay ko to dito. This is now our efficient frontier. So this is interesting. I hope you can stay. Kasi mga 10 minutes lang. All right. So sa efficient frontier, ang gagawin natin, yung weights, we will let Excel do the weights, no? Okay, so how do we do that? So we will now create a random array. Tapos ito, gawin natin itong random weights. Random weights. Random array. Okay. Alright. So random array, okay, ang gagawin natin dyan, mag-create tayo ng mga random numbers. Alright. So this will be equal to, type natin random array. Ayan, rand array pala, sorry. Rand array. There. Rand array. So ilang rows? Isang row lang. Tapos ilang columns? 1, 2, 3, 4, 5, 6 columns. So 1 row, comma, 6 columns. Alright? Okay, pwede tayong maglagay ng minimum o maximum. Pero wag na, hindi na ako maglalagay. Okay? Control, enter. Alright, so nag-generate siya ng mga random numbers, 6, no? Isang row, 6 na columns. And then let's have this, let's add this. Oops. Ano ba yun? Sum, okay. Bakit B66 yan? 366. Ano ba to? Sum nito. Okay. $366 number. Ngayon ka lang nakita yung ganyan. Okay, kasi array kasi, no? Alright, if I press F9 class, nagbabago-bago siya, no? Nagbabago-bago siya. So, we cannot use this for the weights kasi hindi naman nag-1 yan eh. So, the technique now is we're going to equate this to this number divided by the total. Yan. And then we're going to fix the total. Okay, we can fix the, fix na lang natin lahat. Or we can fix just the column. All right? And then, there. All right. So, F9 tayo. F9. You know, magge-generate siya ng iba't ibang weights. Pero ang total 1. There. All right. So, every time na notice what happens when we're generating different random weights, di ba? Magbabago yung expected return. Kasi yung expected return is based on the weights. Magbabago din yung yung portfolio, yung risk natin. All right? So what we're going to do now is we're going to plot this. Ito na. Ito yung last class. Okay? We're going to plot this. Magkre-create ako ng number 1 here hanggang, let's make it up to 10,000 na lang. No? From 1 up to 10,000. So from 1, by the way, may question kayo dun sa I hope wala kayong question dun sa sa random array. So yung last class, no? 1 and then series columns, no? And then step value 1 each up to 10,000 na lang. You can make it 20,000, but in the interest of time, just make it 10,000. 10,000, okay? So there you go. No? So meron na tayong 1 up to 10,000. So we will tell Excel to give me the risk. Okay? Okay, the risk is, asan yung risk ko? I'm going to equate the risk here. Risk is dun sa dulo, no? Sa random natin. Here, this is my risk. Okay, that's V69. Enter. And ito yung returns ko is equal to V68. No? 69 yung risk, 68 yung, okay. So this is my risk, this is my return. Okay? So what I'm going to do is, I will ask Excel, so I'm going to highlight this, and then Control-Shift down arrow, down. So hanggang 10,000. Okay, so I'll tell Excel to populate this column with whatever value appears in the random array for the risk, ilagay niya dito. Whatever value appears in the return, ilagay niya rin dito. So magkakaroon tayo ng 10,000 random numbers ng risk and return, di ba? That's what's happening here. So how do we do that? We go to data, what if analysis, and then data table. Yun. Okay? So yung data table na to, yung input cell natin andi dito sa columns. Ito. Alright, it's in the columns. Alright, so I go here to the column input and I just click any cell outside. Just click any cell here, kunyari dito. Okay, ang sinasabi natin kay Excel, ang input natin, yung column, itong pababa na to So, di ba nagra-random sa baba? Di ba? So, it will generate 10,000 random numbers. Tapos, kung ano yung lumabas na risk and return, ilalagay niya dito. Right, okay. Yan. So, whatever, yan na. So, nag-generate na siya ng 10,000 na random numbers na yung computation ng risk and return. Okay? So, I'm going to now highlight, highlight natin to, no? Gawin natin percent para pareho-pareho sila. Percent. Ilagay natin. Yan. All right. So what I'm going to do now is I'm going to highlight this, Control Shift down arrow. All right, go up again. Okay, for this one, siguro if you are not able to follow, anyway, you can do it on your own. Ipapakita ko na lang no, para in the interest of time. So let's insert a scatter plot. Ito lang. Kasi medyo baka hindi nyo ito mahabol eh. No? So insert scatter plot. Okay? So tingnan natin. Ito yung scatter plot natin. This one. Okay. So let me just fix this. Okay. So it doesn't look good. Ano, hindi kita yung efficient frontier. So I'll right click here. Click here. Format data series. I-ano ko lang yung ano. Itong data series. Yung marker palitan ko. Marker options. Built-in. Gawin ko yung maliit lang. Nari itong siguro itong ano lang. Itong line lang. Tapos size, liitan ko lang siya. Siguro, yan, 1. Okay. And then, yung minimum kasi na ano, no, ito yung risk eh. Diba? So this one, it's, ano to? Anong point to? This is 1.2986 yung risk na to. So liitan natin to ng mga 1.2986, mga 1. Kahit mga 1.28. Bawasin ko to. So format axis, I'll make it 1.28.
Yes, sir. 1.29, Chef.
Okay, sige. Thank you. 1.28. Grabe, makakalimutin talaga ako. Okay. Yun ang minimum, ano? Enter. Oops. Dapat, 0.128. Alright. Yun. Medyo okay na, no? Alright. Dali. Okay. So, okay. You can now see, this is now the efficient frontier. Ano ko na lang next time class, ano? Kasi dapat yung efficient frontier, ano siya, dapat may, parang, dapat ang mangyayari niyan, may line siya dito, no? Yung line dito, yun yung efficient frontier. Okay? So, it means that all the portfolios in the efficient frontier, they are the ones that should be the choice. Any portfolio, ito kasi mga portfolio to. Ito. Yung mga, each of this dot here is a portfolio. So any dot, any combination of a portfolio that's not in the efficient frontier is not optimal. Yung efficient frontier well, this is what we call efficient frontier, no? Tapos yung mga optimal portfolio natin, yung nasa efficient frontier. Hindi lang masyadong apparent dito, no? But there should be a line here. Parang ganun. Connecting this. Siguro if we increase it siguro to maybe 50,000, then that would have made the efficient frontier more pronounced. So this is the idea of the efficient frontier. So you can compute for that portfolio, that combination of weights, that will give you either the, kasi kunyari, if I go here, ito sa ano na to, kunyari itong portfolio na to, no? Kasi itong point na to, portfolio to eh. Ito. Itong portfolio na to will give me a risk that's equal to, kunyari 1.6, 1.7 kunyari. And then a return of mga 0.05 something. Pero I will be able to find another portfolio above here. Kunyari ito. Itong portfolio na to, pareho kaming risk, pero mas mataas yung return niya. So that's what this means. So kunyari ito, this asset, this portfolio here, ito. Diba? 2.615% yung risk niya. 0.033 yung return. If I go up here, I will have a portfolio that has the same risk but a higher return. Diba? So it doesn't make sense to invest in this type of an asset portfolio na it will give you a risk this amount, pero ang return niya ito lang. meron tayong isang asset na pareho lang yung risk na makukuha mo eh. Pero mas mataas yung return. Okay, so that's what this efficient frontier is all about. Okay? So, as I said, if we increase the ano siguro, mas magiging pronounced yun. Ito, malamang ito yung ano natin, 1.2986, this is the minimum variance. Ito kasi yung pinakamaliit na ano, this is the smallest, smallest risk that we can possibly have. Okay? While at the same time, maximizing your returns. All right? So, okay, I hope you learned something today. Let me stop recording now.